Before you click buy on any Bitcoin ETF, you need to hear this. One of these giants, BlackRock's IBIT or Fidelity's FBTC, is secretly positioned to cost you thousands of dollars in the long run. The fees look the same, but the hidden custody risks and long-term liquidity differences are massive. Stop making a simple mistake that could cost you millions. Today, we cut through the noise and give you the definitive data-backed verdict: which ETF deserves to be in your portfolio. Let's dive into the ultimate BlackRock versus Fidelity showdown. We are looking at a battle between two titans: BlackRock with their iShares Bitcoin Trust, ticker IBIT, and Fidelity with their Wise Origin Bitcoin Trust, ticker FBTC. Both funds offer you direct exposure to Bitcoin, but they are not identical. Making the wrong choice today could easily shave 10 to 15% off your total returns over the next decade. Let's start with the most talked about metric: the fees and expense ratios. At first glance, the fees look incredibly competitive. Both issuers launched with very aggressive, often zero-fee waivers for the initial capital or for a set period. However, what matters to the long-term investor is the standardized expense ratio once that waiver expires. Currently, both IBIT and FBTC have announced very low expense ratios, but pay attention to the fine print. BlackRock's standard fee structure and Fidelity's standard fee structure have slight differences. Even a 5 or 10 basis point difference might sound trivial now, but on a $100,000 investment over a 10-year period, those basis points accumulate to thousands of dollars in hidden costs that drain your potential Bitcoin wealth. We need to identify which one is truly cheaper over the next decade. Beyond the fees, the next most critical factor, especially for large investors or frequent traders, is liquidity. This is determined by the daily trading volume of the ETF. Why does high volume matter? It ensures that the ETF's price closely tracks the underlying Bitcoin price, minimizing something called the bid-ask spread. A tighter spread means better trade execution, so you pay less to buy and get more when you sell. In the initial race, BlackRock's IBIT typically pulled ahead, consistently showing higher daily trading volumes and better liquidity than many competitors. This superior volume often results in a better price for you when you execute a trade. However, Fidelity's FBTC has quickly gained ground, often coming in second or third place in terms of volume and managing to keep its spreads extremely tight. As a long-term investor, you might think volume doesn't matter, but it signals institutional confidence. When large banks and financial advisors enter the market, they prefer the most liquid product because they can move massive blocks of shares without affecting the price. Therefore, high volume in IBIT or FBTC suggests greater institutional adoption, which is a key growth metric you should track. Finally, let's talk about the true differentiator in the crypto world: custody and security. When you buy an ETF share, you don't own Bitcoin directly. You own a share of a trust that owns the Bitcoin. So, who holds the keys? This is where the approaches of BlackRock and Fidelity significantly diverge. Fidelity, FBTC, often utilizes self-custody. They have built their own sophisticated internal custody solution, Fidelity Digital Assets, which gives them maximum control over their Bitcoin holdings. For some investors, this vertical integration offers peace of mind because the custodian is a familiar entity, Fidelity itself. BlackRock, IBIT, on the other hand, relies on third-party institutional custodians, primarily Coinbase custody. Coinbase is widely trusted, insured, and has a strong regulatory track record in the US. The key risk here is counterparty risk. While both firms use cold storage and high-level security protocols, the question remains: do you prefer the risk consolidated internally, Fidelity, or spread out to a highly specialized third-party institution, BlackRock? Both models have their pros and cons, but transparency in the custody arrangement is paramount for long-term security. So, which is the better choice for your portfolio? IBIT, BlackRock,
or FBTC Fidelity. Frankly, both are excellent products designed to attract institutional capital with highly competitive fees and security. However, your decision should come down to two factors: liquidity and custody preference. If you prioritize the highest daily trading volume in liquidity and trust the Coinbase third-party custody model, IBIT might be your choice. If you prefer the comfort of internal self-custody and trust Fidelity's established financial structure to handle the Bitcoin directly, then FBTC may suit your risk profile better. Remember, both funds are designed to win the long game, but pay attention to those slight fee differences over time. Don't invest blindly. This is just one step in securing your financial future. To see a detailed breakdown of which fund's performance metrics are currently leading the race, make sure you watch our next video. If this comparison helped you make an informed decision, hit the like button and subscribe now for more US-focused crypto and financial strategies from Crypto Market Views24. Let me know in the comments, which ETF did you choose, IBIT or FBTC?